Good afternoon traders, it's Simon at Kairos Capital Markets with the weekly review of AUD, pound yen and euro dollar. So overall this week it's been another messy, choppy week where lots of scalpers have been whipsawed out of lots of positions. For me personally, I just closed out my dollar short positions and left it at that pretty much. And what's happened now with the dollar itself is on the weekly perspective, we've got another inside bar of the inside bar, which is almost like a doji. The daily did test the daily 50 EMA and then moved up, but then has broke back down again. So for me personally, it shows lots of indecision here on the weekly chart, which does suggest it doesn't want to go any higher. The daily chart, you could say, I personally think it's a bull trap person myself, but I'm just waiting for confirmation, so that please understand I'm not saying sell or buy, I'm just saying I'm waiting. The daily 50 EMA was respected. We did say if we did respect the daily 50 EMA, don't take any dollar short positions, so that's what's happened here. But again, though, you couldn't take any dollar long positions because you're trading back into the pattern and the key level there, which is quite annoying. So it is a week of sit on your hands, don't do nothing, and wait for better trades to come up. And then obviously on the 4-hour chart here, what we do have is a triple top pattern forming on the 4-hour chart at 96. And you can see the rejections here are quite strong there as well. So for me personally, I do have again a bearish sentiment to the US dollar, but you do really need to sit on your hands and wait. However, if you was to take a position now, you'd have to put your stop, for example, if you put an entry here, put your stop above all the highs here, and then you can target the extreme lows. So we want to target, for instance, 93. We got a 5% trade there, so you could definitely look at the next key levels in the higher time frames, and 5 to 1 ratio is a pretty damn good trade, it is really. But still, obviously we've got to look at other pairs. So let's look at AUD to start with, and to be quite honest, I don't like this pair. Again, we're just chop. I did say it's all chop. I don't want to trade into the daily 50 EMA. I don't want to go short. We're in the middle. I just want to leave this pair alone. I think it's utter mess and rubbish. Far better things out there. The only thing you can say is got a doji candle there. It means nothing. It means absolutely nothing this week at all. And an inside bar. So it might pop up. It might pop down to this week. And to be quite honest, that all depends quite literally on the dollar. But this pair, there is no long-term positions to take long or short. It's been running so long, bearish for so long, I wouldn't want to take a trade. It's been going long is absolutely silly right now. So this is a very risky pair to trade right now, and I wouldn't want to trade it. So let's go to the euro dollar, where you get a little bit more structure, you could say, but even though it's still rubbish, again we tested the daily 50 EMA, but we've made a little mini double bottom there. We go to the 4-hour chart on euro dollar. It's almost an inverse of the DXY, is to be quite honest, guys. And there you can see the little mini double bottom at 14.4, which was key level, a little bit key there in the past. So you can definitely say that, and you probably do have some, you got some bullish MACD divergence as well, which is nice to see in the 4-hour chart. So overall, it is looking more bullish, but like I said, it's unconfirmed. If you take a trade here, I feel that you'd be taking a lot of risk here because you are testing a 4-hour 50. Bear in mind, it tests more than it breaks, so a small pullback wouldn't be a surprise, but at the same time, overall, I still would be slightly on the bullish side to this pair. But again, I think it's mess. I think it's rubbish, and there are far better pairs out there. The weekly chart shows you another inside bar, exactly the same as the DXY. So it's one of these pairs where why take the risk and go and pick another pair? To be quite honest, guys. And pound yen. Pound yen has tested the weekly 50, not a proper test, don't really like it, but it has definitely rejected it, so you've got to bear that in mind. But then when we do look at the weekly 50, I'm just going to zoom out a bit for you here. Well, what I will do, let's just do something very nice here. Let's just do that. There you go. And you've only got one real test here, and it's been chopping through majority of the time. It did test here as well, but this isn't really a proper test. Notice how it does chop through it quite a bit. So I would be a little bit concerned of this pair, but just, you know, I'd still keep in mind that it's done that. If you then look at the daily chart, this is the problem you see. Look at the daily chart, you've got a test of the daily 50 EMA, and again I'm going to take out all these lines, very confusing. There's the daily 50. When it's trending nicely, it's respecting it, and then all of a sudden, are we trending here? You could be, you could not be. I mean, it's had a break and retest of the daily 50, which looks like it's bullish, but then when you come down to the 4-hour chart, you have that problem there where I said about the box, a break and retest. Now I was hoping that when we had a break and retest, it wouldn't be at the end of the week, it'd be more mid of the week, and that's the problem you have. Now obviously it clearly says that either the yen's going to power up or the pound's going to break down, and I am already bearish on the pound, so that does make a sense there as such. Is it worth that kind of risk reward? Well, in all fairness, let's look at the volume. The volume has picked up here, and we have to really dissect this one quite in depth. So yeah, you can see the volume moving up was a decent bar. The volume rejecting the box was actually of a higher volume. So for me, it clearly says that it's struggling to break back into the box again. So I would definitely be interested in that. Also, it broke out of the box with super high volume as well. So for me personally, I feel that maybe that there does look quite genuinely being a break and retest, and this rejection of the daily 50 may not be so much. So the other thing as well I like about this is when it broke down to the downside on Monday last week when we had the gapping. Also notice that doji is of low volume, so it's not rejecting the daily 50 EMA. I know the volume's picked up a little bit now, but that's all on break and retest. It doesn't seem to be testing the daily 50. So let's just have a look now what we can do. If it was me, this is the 1 hour chart, and all you can do really, if you want to confirm when the 1 hour breaks its trend, we do something like that. We do, and that would actually give you a fairly precise entry point when you actually want to enter. So let's say it's there, you put your stop up there, and we're targeting 144. So that's only going to be a 2.5% trade, and that to me personally is a high risk trade, that is, no fairness, but that's roughly what you'll be looking at. So if it does break down, break and retest, make a double top pattern, that wouldn't be so. If you made a double top pattern there like that wouldn't be so bad. No, you can then lower it down a little bit like that. You could, so yeah, you could get a double top pattern, have an order there afterwards. Would make sense, but it's still high risk. All the time frames don't line up, and a lot of charts this week are exactly the same. So just be careful there, guys. Okay, thank you very much.